Hi everyone, welcome along and thanks for watching, and of course a very happy new year. Apologies for what appears to be a slight delay in getting this January video out, but there's actually a very good reason for it. I wanted to see how the market would react in the new year. Then first few trading days is very important and helps us set the tone for what the market's trying to do, which has been critical for us, and also to try and get the first week's COT data updated with real numbers coming through there, which we got on Friday. So we've got them on board. We've seen the market actually perform quite well last week. So now we're going to take a look at what does that mean going forward into January, and actually we're going to take a little bit further ahead as well. So what are we expecting to see? The main theme in January tends to be weakness. Actually, I know we finished a lot of markets through December, equities, currencies, a lot performing well even through the Christmas and New Year period. But generally, as we come into this period, what we tend to see is equity weakness and currency weakness. You'll see a lot of reds up here, and it is tends to be one of the weaker months, especially on the equity side. And the other theme tends to be strength in metals. So I'm going to take a closer look at these three and to see what's the likelihood actually of this playing out based on what position we've currently got on our COT. One interesting thing I want to take a look at as well, just to try and put a bit of context on this, which is very interesting. This is a seasonal chart that I've just finished this week actually putting together. This is a seasonal chart of the S&P 500 with a slight twist on it, and the twist is the presidential cycles, the US presidential cycles. You'll see here the purple line is actually the US cycle for the midterms. We're heading into 2018. We're heading into a midterm year, and the reason why I'm putting this on is midterm years tends to be the one of the worst of the 4 year out of the 4 year cycles. So that tends to be a year when actually the stock market tends to underperform. Generally considered how we've performed over the last couple of years, we could see a little bit of weakness and maybe a bit of a pause, especially through the summer and through here. But the main point we were looking at the moment is just right over here. We've seen it start quite well, and equities definitely started very positively right across global equities actually. We've seen it start quite positively this week. Now will be interesting to see how that plays out. Does it continue, or do we see that actual weakness coming through? If we start to see that weakness and a bit of profit taken actually in through there, be wary of getting in to long positions again. We might actually see this continue into late January and into February, so just be careful there. We're still likely to see a rally through February into March like we typically would do, but it's just the timing of that entry. Just be wary of looking to get into it too early, because you may get stopped out on that. If you're interested more on these presidential cycles and a number of other things that we're looking at, we're actually putting this all together into an ebook at the moment, which will be available towards the end of this week. So you want to know more, check the link at the bottom of the video. So with that in mind, potential weakness in the equities coming through in the currencies, possible strength in our metals. What are we actually seeing at the moment coming through in our COT data? We're actually looking to our COT data. We are seeing selling across a number of currencies, in particular the euro. Big increase this week in the COT data coming through, seeing a big spike up in commercial selling action, getting all-time highs, big rally up through there, and the euro struggle. I thought we'd have another little pop up to that 120, 121 high again, but it looks very likely we're going to see a retracement back from that. So not looking to be a buyer. And the euro, similar with the pound, position is looking a little bit tired in that as well. Seeing an increase on the sell side. The only two currencies that have actually are seeing relative buying in this last few weeks, especially in the lead up to Christmas, have been our Kiwi and our Aussie, where we did see that buying pressure coming into Kiwi and seeing a nice run from it, but that's actually slowing down as well, as is the Aussie. Again, nice increase through here on the buy side as sellers disappeared. I think we should see a little bit more in it, but just timing of those moves to the upside, we may see a retracement before another push. Say the equity weakness, definitely looking in through the S&P here on the COT data. We're seeing a big exodus on the speculative side, and in the times in history in the past we've seen a lot of positions leave the market. The S&P has actually tended to struggle for a few weeks around that period. So it would actually be nice to see if we could take a bit of a breather from where we currently are and actually see some profit taken. I'd rather not be a buyer at the current levels. So ideally a retracement from where we're at, and I'd be happy to be a buyer towards the end of January into February. On the metals side, as well, we were saying they should be benefiting. Gold and silver typically would whenever the equities are struggling. We did see an increase in the buy side on gold going into Christmas, and we've seen gold perform quite nicely from it, but we haven't seen a follow through of that, and it certainly didn't get to the buying, or the relative buying didn't get to the same highs that we've seen in this last few Christmases. So maybe not just as much money flowing into gold as we would like to have seen through there. But all in all, based on the data that we've got coming through from the first week, it does look like we could see weakness across a number of our currencies, weakness in our equities, and a little bit more upside in our gold and silver, things like copper and palladium. I'd likely see a bit of a sell-off on those. So yeah, keep an eye out, guys, for the ebook coming out towards the end of the week. It'll be a useful resource for you. Keep it side of your desk, help you get through. There's a lot of buy dates, a lot of information in through there, so keep an eye out on that. Other than that, I'll be back at the beginning of February. We'll take a look at how the markets are playing out and where we can get into as well. Okay, guys, thanks for watching and happy trading.